Apple in the early 2000s obviously didn't want to pay taxes, as most corporations don't. So they figured out that in the US, the rule is if you're a US based corporation, you get taxed on your income no matter where you made it in the world. However, there was a certain foreign country that had the rule that said it doesn't matter where your corporation is based, you only get taxed on the money that you make in our foreign country. So you might be getting a sense of where the gap is here. What Apple did was they based their business in the foreign country, and then they ran operations in the US and made all their money in the US, but it wasn't a US based company. And so because they were a company in the other state, and that other state was saying, hey, you only get taxed on money you make here, and the US was saying you only get taxed if you're an income generating corporation here, they weren't getting taxed in that country or the US. And so they basically paid nothing. Now, this was a loophole. This was a flaw in the system, 100%, and it's been closed now. But actually, this was a huge debate, and they got into IRS law where they were saying that they had to go back and pay all that money. However, for like 10 years, this went on and was a completely legitimate strategy at the time, but it got blown up in court.